values are a necessary evil in Florida, but we Floridians love a discount. In this video, I'm going to be talking about homestead exemption and how that discount on your property tax benefits you, especially your mortgage payment. So stay tuned. Hey everyone, welcome back to my channel. Today we're talking about homestead exemption and how it benefits you and your property tax when you buy a home. Before we get started, if you're new here, I'm Linda Hart. I'm a realtor with Century 21 in St. Petersburg, Florida, and I dive into the ins and outs of home buying and selling, as well as saving you money on maintenance of your home and all that good stuff. So if that sounds good to you, give this video a like and hit subscribe so you'll be notified when I post a video every Thursday. All homeowners that purchase property have to pay tax. Now, we don't pay regular sales tax like we do on clothing or food. In Florida, we pay a property tax. Everybody likes a discount. Well, the state of Florida gives you a property tax discount called a homestead exemption. But you have to qualify for homestead exemption. So what do you have to do to qualify? You have to have a deed for real property in the state of Florida, and you have to have that home be classified as your primary residence where you live day in and day out. If you bought the home as an investment property but you live somewhere else, that is not considered a homestead exemption qualification. If you do qualify for homestead exemption, it gives you a discount. For properties valued up to $25,000, your property is tax-free. If your property is valued between $50,000 and $75,000, you will get a prorated amount based on the value of the property. So you'll get the $25,000 for the first exemption, and then they'll prorate that second $25,000 discount based on where your property value lies between $50,000 and $75,000. If your property is valued at $75,000 or more, you will get the full $50,000 discount for most municipalities, with the exception of school districts. School districts do not allow that second $25,000 to be discounted for their assessment of the taxes. So not only are you getting the $50,000 deduction, but you're also getting capped at what they allow the tax assessor's office to value your property at. If your home is not homesteaded, they still cap it at 10%. One of my clients had called me and said, Linda, what's up? I've got a notice from my mortgage company that my payment was going up. And I said, well, it's probably your property taxes that were going up. Remember, we talked about the previous owner had their property homesteaded, and whenever you buy a property, that homestead exemption drops off until you get it for the following year. It's important that we discuss these things with our clients. I always try to do that, but sometimes it's forgotten. Occasionally I'll get these calls, but a lot of people have questions about it, so I figured I would just kind of explain how it all works. You buy a property in September of 2019. The property has a homestead exemption on it. The previous homeowner lived there for 20 years. The property tax on the listing when you purchased it said that property was valued at $75,000, so the taxes were only like $900. December 31st, that homestead exemption drops off. In November of that year of 2019, the tax assessor's office sends out a trim notice, which is basically a preliminary notice about your taxes, telling you what your taxes are going to now be assessed at. If you don't pay attention to those notices, if your taxes are escrow, and you get a notice from your mortgage company saying your payment's changing, hopefully for the better, but usually it's higher than it was. Why does my payment go up? On January 1st, the tax assessor's office takes all of the real estate activity for that prior year, so 2019, and they reevaluate every property. Well, that homestead exemption jumped off December 31st, so when that property is valued, it's based on the sales for that year. Say this property was valued at $150,000. So the taxable value jumped significantly. So what that means for the client is their tax went from the $900 to $1,700. So that's pretty much double. So that can really impact your mortgage payment. You don't see it coming. So come March 1st, that's the deadline to file for your homestead exemption. I file my homestead exemption before March 1st. Shouldn't I get that discount before the new payments roll out? Well, no, because in Florida, the taxes are paid in arrears. So basically you use up all the tax benefit during the year and you pay it in November. The tax office tells the mortgage company, you're gonna pay the tax for this past year, but because the homestead exemption was taken off, the tax went from $900 to $1,700. If your property tax goes up $900 or $1,000, then you take that $1,000 and you divide it by 12 months, and that's the increase in your payment. So in January, when you receive your new mortgage statement saying that your payment's going up, they also give you an opportunity to pay down the escrow shortage, which basically is saying, okay, the mortgage company's paying for the taxes now, but you have to pay us back throughout the year. Or you can make a lump sum payment to make up for the shortage. So if you don't want your mortgage payment to go up, but you have to pay the increase in the property tax, then you can make a lump sum payment, but you need to designate it to the escrow account. Do not just make a regular mortgage payment. If you pay online, there's usually a field that says make an escrow payment only. And the final benefit of a homestead exemption is the ability to shelter your home or protection from debt collectors. Credit cards, auto loans, child support, alimony. They cannot take your home if your home is homesteaded. However, if you do not make your mortgage payment, your homestead exemption does not protect you from not paying that mortgage. So make sure that you pay your mortgage. What happens if you own a home that is homesteaded and then you sell it and you move to a new home? Good news is that you don't have to remove that homestead exemption from the home, because remember, it gets removed automatically on December 31st. However, you do have to apply for a new homestead exemption on your new home. I speak from experience. I had to go 2 years because I did not remember to file my homestead application until I think it was May that I realized it. It was bad. So don't do that. As soon as you close on your home, go to the tax office or go online and apply for homestead exemption. You won't get it until the following year, not this next year. Say, you won't get it for 2020 if you bought your home in 2019. But it'll kick in January 1st of 2021. After that, once you have it, you don't have to do anything. I always send an email and a group text to all my clients that closed in that previous year to remind them that they apply for that very important homestead exemption. Whatever the previous homeowner's tax was, it's never gonna be the same. It's super important that homeowners, especially new buyers, know that those things are never the same and that it will impact your payment. Hopefully this was helpful. Give this video a like and please consider subscribing to my channel. I drop a video every Thursday, usually, if I'm on time. Thanks so much for watching, everybody. Please make sure to give this video a like, and I look forward to seeing you next time.